numbers are really strong. Just about every metric, if you look at it, the adjusted earnings per share beat, comp store sales up 4.8%, traffic up 4.3%. What really jumps out at you?
Yeah, I mean, and even the digital channel sales growth of 42%, you know, that's pretty strong and kind of above what we've seen the last several quarters. I mean, I think this all just plays into Target's narrative of using those stores and online together, and it does really appear to be working. And when I talked to Target, they said, look, we know that, you know, Amazon and Walmart are pushing this next day, but actually we're already doing same day in many of these cases with a lot of these options. Shoppers are choosing to maybe order online, pick up in store, use the ship service. And then when they are ordering and it's 2-day, in about half of the cases, it does end up getting there in 1 day.
Right.
So I think that that's pretty powerful, at least when it pays off and you do it as a consumer. If you're pleasantly surprised that it only got there in 1 day, you know, why not try it again?
Right. Charlie, we talked to an analyst this morning who said, even before we got these numbers, that what you continue to see in the retail space are just the differentiation between those who have figured out an online strategy and those who haven't.
Absolutely. And it's haves, have-nots. It's the weak, the strong, however you want to describe it. There's a clear benefit to being big. You've got the ability to invest. You've got money. You've got the big store base, as Courtney said. You leverage those stores with your online business. It's a tough model to compete with. And, you know, for Target, this is a bullseye quarter. I mean, this validates everything that the company said it was going to do a couple of years ago. And there's a lot of momentum building here. You know, we saw the Vineyard Vines launch over the weekend with people complaining, like they always do with Target's limited edition stuff. There's not enough. Gee, what a tough problem to have. I mean, you know, I went on eBay a couple hours after it launched, and the profiteers were really active. So it's resonating. The exclusive brands are what drives us.
Oh, you mean people were buying it and then turning around and selling it on eBay?
Absolutely. That's a cottage industry now with Target's exclusive stuff.
Oh, that's annoying.
It can be. But again, for the company, it's creating buzz, it's creating media, and, you know, buzz equals store traffic. And that's what Target needs. That's what every retailer needs right now. Get the people in your stores, get them on your site so they don't go anywhere else, and you lock them in.
We still have a lot of unknowns, of course, with everything that's going on in tariffs. But if you have a business like Target, you have a lot of different categories that are not going to be subject to tariffs. So that gives you a little bit of padding and a little bit more room to make some tough choices if you have to. So if you have to raise prices in one area, you don't have to do it across the store. And so I think if you have a business that has multi-categories, that can help, like a Walmart, like a Target. If you're apparel, and if that fourth tranche comes in, I just don't know what choice you have than to raise prices across the board.
Right. Charlie, how do you try and game that with trade talks being such an unknown factor?
That's the issue. How deep will they go? Will that fourth tranche come in? How long will it last? There's a clear possibility here that the retailers could overreact to this, and then where are you? Maybe you get stuck. If you're a savvy retailer, again, the bigger guys, you've diversified your supply chain. We saw the Hange in bankruptcy a few years ago. We've seen port strikes. We've seen all sorts of disruptions. And retailers were moving their supply chains and their sourcing capability to other countries. Vietnam comes to mind immediately. So you have to keep doing that. And you can't put all your eggs in one basket. And a lot of the retailers were looking at China saying, you know what, do we really want as much reliance on that one market for our goods? And the better ones said, we need more balance. And they're already, you know, they're prepared. Will there be an impact? Absolutely. But I think it'll be pretty muted for the big guys.
What do you do in terms of looking at other retailers? I know you don't cover Target, or I'm sorry, I know you don't cover Lowe's or Home Depot, but do you cover any of the other ones we've heard from in the last couple of days, a Nordstrom?
No, I've got the big guys. I've got Amazon, Walmart, Target, Costco, Best Buy, which reports tomorrow. Then I have the auto retail space, which is really kind of neat. AutoNation, et cetera. And I've got some smaller retailers. You know, I've got collision retailers. I've got a little appliance retailer, billion-dollar company called Conn's down in Texas that has a proprietary business.
The big guys that you just mentioned are all the ones who do seem to have something figured out with this online strategy.
Yes.
So how do they kind of duke it out? You think Amazon, Target, Walmart, Costco?
It's a cage match right now. I mean, you've got Walmart and Amazon fighting over market share. Costco's different because of the warehouse membership model. It's a little bit different animal. They don't need as much of an online business. I also cover BJ, same phenomenon. But Walmart and Target are really battling hard. It's been going on for a few years now. if you're a Target, you have to pick your spots. Even Target at $75 billion in revenue isn't immune to the collateral damage you can get from that. So for Target, the exclusive brands are meaningful, and you really need to kind of work around the edges on price going up against Amazon and Walmart, because you can't, I don't think you can win that battle if you're Target. You can't compete with those guys just on price. Amazon's got those shareholders that don't really care that much about profits yet, and Walmart's got so much pricing power with vendors that it's tough to compete with them on price. So you have to be very tactical about it.
But you would say, in general, you like all four of these players because they all do have a strategy?
Absolutely, and I'd throw Best Buy into that mix as well.
Yeah.
Best Buy has done a phenomenal job over the last several years.
That has been a huge turn. Court, when you look at the guidance that they're giving, that Target is giving, it's not as strong as you might have anticipated given the big beat that they see this quarter. You think that's because of tariffs?
You know, I think it could be, and I think that that's going to be a big, excuse me, a big question today on the earnings call. You know, sort of what is the anticipation factor, and how much do we know now? I think there are so many question marks for this year that we've seen conservative guidance, and actually, frankly, I have to say, a lot of the retail CEOs have been a little bit more honest, I think, with the investors. Look, we just don't know. There's a lot of things that could change, and I think at least they're being transparent about that and sort of saying, look, we don't want to go out on a limb and make up these numbers that we may not be able to hit because of all these factors that could come into play that we frankly just don't have details on yet.